Hi, I'm Rachael from Willow Financial Services, and today we are branching out into the world of mortgages, specifically for first-time buyers. We'll explore the different mortgage types, helping you navigate the home buying process and sow the seeds for your successful property purchase. So let's start this journey. So we'll start at the beginning. What is a mortgage? A mortgage is a loan for buying property or land secured against the value of the asset. Failure to repay can mean the lender will repossess your home, so it's important that you can choose a mortgage that you can comfortably afford. Mortgage terms vary between 5 and 40 years, and remember, the longer the term, the lower the monthly payment. However, this does mean that you're paying more interest over the mortgage term, so don't automatically assume that a longer mortgage term is the best option. Mortgage types vary. Usually you have an initial short-term period, such as a 2, 3 or 5 year deal, although some 7 and 10 year rates are also available. A fixed rate mortgage keeps your interest rate the same for that set number of years, offering you payment stability. A variable rate mortgage means that the mortgage will fluctuate in line with the lender's standard variable rate. A tracker mortgage will track a set index such as the Bank of England base rate. Now, after the initial period, you would automatically go onto the lender's standard variable rate, which would usually be higher. However, that doesn't mean you can't change. At this point, you would simply either select a new rate with the existing lender, that's called a rate switch or product transfer, or you can simply remortgage to a new lender and take a new deal. Most mortgages are on a repayment basis. This means the amount owed reduces each month in line with your monthly payments. Interest-only mortgages are rarer. This means that you're only paying the interest each month, so the original amount you owe will still be the same at the end of the term. So if you do take that option, you will need a way to eventually repay the loan. The house buying process will start with you obtaining a decision in principle so that you know how much you can afford to borrow and what that is going to cost you. Once you've got your decision in principle, you can then start looking at property. Find a property that's in your budget, you make an offer, and we will then formally apply for the full mortgage application. A solicitor will carry out the legal work, and after a successful property valuation, the mortgage lender will issue a formal mortgage offer. Once a solicitor has finalised their work, you'll exchange contracts and complete on the purchase. That's the day you get your keys. Saving for a deposit is crucial. You will normally need a minimum of a 5% deposit of the purchase price. However, the more you can put down, the better, as the more deposit you have, the better the interest rates that are offered to you. You can consider using a lifetime ISA for your deposit, as the government will add 25% extra to your savings. Rules do apply, so make sure you check these first to make sure that you are aware. If you're buying a property with someone else, the solicitor will ask you how you want to own the property. You'll be offered the choice between joint tenants and tenants in common. Joint tenants own the property together. That means if one person dies, the other person will automatically own the whole property. Tenants in common will each own a specific percentage of the property value. That share can then be passed on in their will to whomever they choose. So this is an important decision that affects how the property is owned and inherited. It's important to make sure that you have a will once you own a property to make sure that it is inherited by the right person. Protecting your investment is vital. Life insurance, critical illness cover and income protection can all safeguard your ability to repay the mortgage. It's about ensuring that you can weather any financial storms and keep your home secure. Now, the lender will also make it a condition that you do have property insurance in place. There are various schemes and government support to help first-time buyers get onto the ladder. The mortgage market changes quite frequently, so seeking impartial advice is crucial. We can also provide you guidance on saving for your deposit, understanding the fees, the buying process, and other support. As this will be your largest investment, we're passionate about empowering you with knowledge and excitement for your first mortgage. Other associated costs in buying a home include the solicitor fees, stamp duty if applicable, survey costs, mortgage arrangement fees, and don't forget your moving costs. So make sure that you budget for these in addition to your deposit. This is the compliance bit, so bear with me while I read it. If you do not use the funds in a lifetime ISA to purchase a property, you will incur a lifetime ISA government withdrawal charge, which is currently 25%. This will also be the case if you transfer the funds to a different ISA or withdraw the funds before age 60. So therefore, you may get back less than you paid in to your lifetime ISA. By saving in a lifetime ISA, instead of enrolling in or contributing to an auto-enrolment pension scheme, occupational pension scheme, or personal pension scheme, you may lose the benefit of the contributions from your employer, if any, to that scheme, and your current and future entitlement to means-tested benefits, if any, may also be affected. Will writing is not part of the Quilter Financial Planning offering and is offered in our own right. Quilter Financial Planning accepts no responsibility for this aspect of our business. So purchasing your first home is like planting the seeds for your future. Understanding mortgages is a crucial part of nurturing this growth. At Willow Financial Services, we're here to guide you through each step of this exciting journey. We have a first-time buyer's guide and a budgeting workbook on our website. These are available as free downloads, as well as a whole host of other documents and guides that you may find useful. So go and check those out. Please also follow us on social media for more hints, tips and guidance. For personalised advice, please contact us directly. Thank you for watching, and don't forget to like and subscribe for more videos.